Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. The USD got a boost from the strong US consumer confidence data, which triggered an aggressive rise in long-term treasury yields. The report, however, just showed that the labor market remains resilient, which is good news for growth and not necessarily bad news for inflation. Moreover, the month-end flows might have distorted the price action in the last couple of days, which led to some risk-off sentiment and boosted the yen. The USD should remain supported against the JPY amid the Fed's higher for longer stance and the positive risk sentiment because both the scenarios are negative for the yen. The trend will likely change only when we start to get some recessionary US data that will make the market to price in a more aggressive rate cut path and lead to some risk of sentiment. Now on the daily chart, we can see the USD JPY continues to creep higher amid resilient US economic data. From a risk management perspective, the buyers will have a much better risk to reward setup around this trend line, although we will likely need some weak US data or a downside surprise in the US CPI to trigger such a big correction. For now, the path of least resistance remains to the upside. On the 4-hour chart, we can see that the price has been consolidating around the 157 handle. There's a good support for the buyers here around the minor trend line, where we can also find the 38.2% Fibonacci retracement level for confluence. The sellers will want to see the price breaking below this trend line to extend the correction into the major trend line here. On the 1-hour chart, we can see more clearly the range-bound price action between the 156.50 support and the 157.20 resistance of the last couple of weeks. We got a breakout recently here as Treasury yields rallied, but all the gains were erased yesterday without a clear catalyst. This might be due to month-end flows distorting the price action. These red lines represent the average daily range for today. If we get a soft USPC, we might get the pullback into this trend line, where the buyers will likely step in to buy the dip. On the other hand, a break above this resistance should see the bullish momentum increasing. Today, we conclude the week with the USPC report, which is unlikely to change much for the Fed, as the central bank remains in a wait and see mode. Nonetheless, a cold report could weigh on the USD JPY in the short term, while hot figures should give it a boost.